Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, October 4th, 2016. In this video, we'll take a look at the mining sectors. I was asked to do an update today, which I was planning on doing anyways, and now we had the first technically significant event in a while. I'll get to that. This video was sort of impromptu. I haven't really even looked at, I've looked at a few of the charts. I've been busy this morning. Made a few trades, closed a couple positions in the miners, actually one at this point, and may close some more. Also taking profits on quite a few of the cannabis stocks. The gains have been nothing short of phenomenal in these stocks, just about every one that I've pointed out for the last couple months. So the momentum's there, and again, that's a video or a topic for another time. I'll try to update that. I have put some notes in the trading room as well. So I haven't closed out all my exposure to that sector, but just taking some profits here. And I think it may be time to do the same in the miners. I know a lot of you have asked for weeks now also when, you're more interested in going long. There are people that don't want to short. Maybe they don't want to short the miners, and I'll share my thoughts here. As I said, I'm kind of going through these charts without having reviewed them first, so bear with me, and I'll try to keep the videos as brief, but brief as possible, but hit on all the salient points. This chart looks busy, but let's start out with the dollar, because I often say the dollar, gold and the dollar have an on-off relationship as far as correlation goes. Typically over time that is they do have a inverse correlation. In other words, dollar up equals gold down and vice versa. There are times where that correlation is separated and can even flip over, but for the most part, a rising dollar is bearish for gold, being that gold, is often priced in US dollars. So let's take a look at the dollar chart. I put up a couple static posts this morning on the euro and the yen, which is the big news today. We had a breakout in that bullish falling wedge on the yen, which I'll touch on real quickly. And just looking at a dollar chart here, this is a daily chart of the US dollar index. This is an end of day chart. This one's not updated today, so it's not going to show the move. The dollar has broken out, or should be right up here, at the very least up against the top of this trading range. I can pull it up on another screen. We'll look at UUP, or I could pull up one of my futures. I have other charting programs running with real-time stuff. This one just happens to update, and it's easier to use these charts. I have my screen software set up for this TC2000. So either way, that dollar is going to be up here. There's still this downtrend line off the highs. So what you have here, I'll color code these for you. Really this big symmetrical triangle pattern in the dollar. That's one thing to note. Let's just make those purple. And then the even bigger picture, whether we get a breakout to the downside or upside of this, is the large trading range in the dollar, this shaded box. Here, I'll move it. So again, a lot of lines. It's busy, but let me show this to you clearly over here on a weekly chart. See that sideways trading range? This is what the dollar's done. I flipped over to a 10-year weekly chart. And we can see here, I've zoomed in a little bit, there's 10 years of price history. So the dollar had this rip up, this incredible move up back in 2014, right into early 2015, and has clearly been trending sideways since in a very large range. It's quite a large sideways range. And so we flip back to the daily chart, and you can see that's why I have this shaded box. The next major trend of the dollar will probably emerge once we have a definitive downside or upside break. But until then, we're so close. We're in the middle of that range. Let's not be overly concerned with that. Let's watch these triangles, these patterns. And again, let's drill down to see where the dollar is going. I try to look at the currency pairs. The yen is the second largest component of the dollar index, and this is just a very clean textbook bullish falling wedge pattern. I posted this back here before we even, at some point, we were right somewhere here, and again, that's on the front page. So the dollar yen pair has played out as expected so far with a pullback to support. You can see a well-defined support level, found support there, and has bounced and now broken out. So when you're looking at this chart, this is the dollar versus the yen. So this is the dollar breaking out against the yen. That's bullish for the dollar, bearish for the yen. Again, that's the second largest component of the dollar index, and this would tell us there's a little work to be done. I'd like to see the MACD move up, cross up into bullish territory. There's always a possibility of a back test maybe. And let's see a solid close. Let's see the yen close a day or two above here to just validate that breakout. It doesn't appear to be a whipsaw signal, but the day is young, and again, over time this does portend a stronger U.S. dollar. Now let's look at the euro, which is the largest component of the dollar index. And nope, clicked on the wrong one. Euro U.S. dollar. Have it down here. Okay, there we go. We have this triangle pattern here, which was pointed out back here, and I had a scenario drawn, a couple scenarios, but one of those showing the dollar making one last tag, which it did to the top of the triangle pattern, ultimately going on to break down as expected, back tested all along, and has since rolled over. And you know, there's some support levels along the way. I should actually move this line up to this point. That would capture more of those reaction lows. So really need to see the dollar, the euro dollar pair take out that about 111 level, and that would open the door for a move down here. And again, that would be a falling euro, the euro falling against the dollar. In other words, both of these charts bullish for the dollar because you have the dollar here as the second component. So you know, when the euro falls against the dollar, that means dollar up. Okay, here's gold, the ETF GLD. You can see we've had gold working its way down. You know, gold put in this divergent high back here a couple months ago and has since been moving in a well-defined downtrend. A downtrend is simply defined as prices making a series of lower highs and lower lows, and that's what's happened here. And we also had this, the downtrend was in this channel. So today we really fell out. You can see this big bearish candlestick in gold, falling below this support level. I had support T1 here for a while. Gold has been dancing along that level. So today, like I said, was technically significant. We've been really moving mostly sideways to slightly lower until we had that breakdown today. You can see that big candlestick right there. And that is clearly bearish. And the next support level that I have, or support / target, is all the way down here around the 120.56 level. I don't see much before then. So more than likely, that's probably where gold's headed, even if we have a little snapback rally. And keep in mind that support, once broken, becomes resistance. So if gold were to turn around and rally, then you have, let's put a clean board up here. Take a look. Put a line right here at those recent lows, and that's roughly 124.50, we'll call it. Of course, there's the top of the gap a little bit above that. So now that's resistance, and your next target's down here. You can see that target that I had on that other chart also comes in right around that 38.2% Fibonacci retracement, which would be an ideal minimum pullback area for gold. So I do think over time gold works its way down to that 120 area, and that might be a point to go long, but we'll have to see how the charts look at the time. Okay, now on to the miners. This is GDX. This is a daily chart, one of the boards that I have. This is a very clean board, a simple board, meaning I don't have a lot of annotations, trend lines. This just shows the story, or you know, speaks volumes to me. We have a very clean, well-defined uptrend line that forms a bearish rising wedge with this divergent high. You can see the divergence down here. I use a PPO in lieu of the MACD on this chart because of the price movements. When you have a security, in this case GDX, it's gone from about $12 up to 30-something dollars. You take it off log scaling, you can even see distorts the trend lines a little bit. That's a big move. PPO tends to do a better job than the MACD in that instance. So either way, they'll look very similar. So you can see the negative divergence, as price is wedged up, breakdown of the wedge, impulsive, everything you want to see. There were some comments in the trading room recently, well, you shouldn't short breakdowns of wedges. And, I've said I've been doing this for years. What happened in the market recently was that false breakdown in the Qs that caused a lot of failed breakdowns and from wedges and other support levels. But and that happens sometimes. Sometimes you can foresee it in the charts if you read them right. Sometimes you can't. So I've shorted hundreds, if not thousands, of wedge breakdowns, and many of them play out just like this, where if you short the breakdown, you have an initial big move down, and if you wait for the first counter trend bounce, that usually comes well below where the breakdown was. So this one played out as most wedges do. So you have here, let's draw it out here. It's clear to see. You have a breakdown, initial thrust down. We had a bounce, a little consolidation back and forth. And more importantly, today, just like with gold, we have now a breakdown below that recent trading range. You can see there, I'll use the lowest point. We also had I've had a couple trend lines drawn on my other charts. This sort of uptrend line right here, if you will. So this is really a consolidation period. I wouldn't call it a bull flag because it's too big to be a bull flag or bullish or bear flag or a bearish pennant. However, the gist of what it is the same. You have a sharp move and then consolidation, which is, in this case, a continuation pattern because now we've made a clear and impulsive breakdown below. So any way you want to slice or dice it, that is bearish price action. That is a clear drop, impulsive drop down below that recent trading range. There was support there. Next support, well, there's supports along the way. I'll try to get into that, but we could head all the way down here. There's also a gap I mentioned. In fact, let's flip over to that chart. I talked on, here's my other daily chart, and this shows you the gap right there. There's gap support, which we're at the top of right now, and I did mention I'm covering one position. I may cover some more, may even cover my nugget short position, and these are different levels I'm watching. Now we may go back. Just eyeballing this tells me there's a good chance that we may go and at least backfill that gap, head to the bottom of the gap. But the official trade on GDX, we shorted that, if I remember right, we shorted here on the initial reaction. It was put up here as an unofficial trade idea, and I mentioned shorting a lot of the miners, especially the silver miners, back then, up and before and after the breakout. But I waited till the current active short on GDX was shorted right here on that initial reaction high. So we never went underwater on that one. Timing was good. And we had one little bounce. It almost took it back to break even. And now, again, you can see there's that little level, that sort of minor uptrend line. We broken below there. And we went through, we hit the first target, which was at 24.85. And we're dancing right around that target was set on that 38.2 fib. That's a dotted line here. If you look to the left, you can see the Fibonacci retracement levels. There's the top of the gap. And when I put an update out on GDX this morning, I pointed out, gaps are often, you often see a reaction on the initial back test of a gap from above. So we're at the top of the gap now, give or take. Let's see, you can, to get exact, you look at the low was 24.08. I had that line at 24.04. So we're just creeping into the gap right now. And as I said, I'm leaning towards a backfill. But again, if depending who you are and where your profits are, and I know a lot of people have been burned in this market lately, it's been tough. There's nothing wrong with covering here, but another option too is you can set a tight stop. If this gap gets entered, it will most likely get backfilled. And I'm saying entered by a fair amount. Let's say a 60-minute close or a pretty solid move, not just a few pennies into it. And if that happens, then you're going to move down, probably backfill the gap, bottom of it, which is about 23.11 or so. So what you could do is a tight trailing stop, let's say 10 cents, 15 cents on GDX, or if you're trading nugget or dust. I pointed out these the PPO as well. I might have used the MACD, but either way, that's in bearish territory. I talk about that often when the PPO is trading below the zero line or the MACD, and I use the 9 EMA, which is the last of the two to cross. That indicates a bearish trend. So pretty much from here to here, as you can see, other than this one brief exception, this brief whipsaw, that told you the trend was bullish. And you can see how that zero line often acts as support, or support when tested from above and resistance when tested from below. See how we came up here and failed? We're rolling over. There was a couple levels where that white line hit, bounced, almost hit, bounced. So that's one of like I say, one of the most simple yet effective trend indicators. And again, I use all trend indicators in conjunction with everything else. This is another trend indicator here, the 1333 histogram. When the 13 period EMA is above the 33, it's green. It indicates a bullish trend. When it's below, these two tend to move very close together. It just helps to confirm the trend, either bullish or bearish. So my point being, right now my trend indicators are bearish. There is potential divergence. I did point that out this morning. You can see I call it potential, not confirmed, because the PPO and the MACD, it's pointed and headed lower, and that could continue lower. For confirmed divergence, at least in my book, I need to see a crossover with the signal line crossing back above, or I should say the MACD line or PPO line crossing back above the signal line. In other words, these two curling up and making a bullish cross above each other, not just the zero line. and also see the RSI turn back up. And at that point, you would have confirmed divergence because you can take a measure from that previous reaction low, see how prices are making a lower low against the indicators making a higher low. So still yet to be confirmed. So that's what I'm on the lookout for. And especially if we see that crossover, it might be time to take partial or even full profits on the GDX short. You may get here first, and I may revise that target and close this one out early, but that's what we're looking at now. All right, we've got a few minutes, so let's just take a look at a few of the individual mining stocks. Okay, a few weeks back, when we were up here topping out, I mentioned that the silver, out of all the mining stocks, I thought the silver stocks looked poised to fall the most, and this was one of the ones I highlighted. A lot of those look similar with these very steep, very clean, textbook bearish rising wedge patterns. You can see the breakdowns, impulsive, initial counter trend bounce, and has since been moving lower. And today, PAAS, which is Pan American Silver, it hit this is support right here. You can see these reaction highs. I have a support zone. When you see a cluster of horizontal lines together in close proximity, that's really a support zone. And so far now we're smashing through that support zone. So again, you can see prices just like GDX dropping well below that recent consolidation area. That's pretty bearish. And I don't see a lot. There's potential small divergence forming here, but you really have to look at the 60-minute charts or 120-minute charts to see that divergence. As you can see here, I flipped to a 60-minute chart, and this is why I call it potential. You can see the PPO is still headed straight down and could easily take out or burn through that divergence. In fact, we even had some divergence here that never panned out, or at least it didn't pan out for much. Usually these divergences will play out for a little bit, as you can see here. Depends on your time frame. So there was a little bounce to game, and the bigger picture is a lot of these stocks, if this divergence is confirmed, are setting up in what appears to be a falling wedge, or at least a falling channel. You can see here, there's your highs, trend line defining the highs, as well as this downtrend line. So again, something to watch if we see a reversal, maybe a bullish, some type of bullish candlestick reversal here, and we start to see the indicators and oscillators turn back up, then that might be time to reel in the shorts, maybe even go long, but we're just not there yet. CDE, I can't recall. I have targets here, so this may have been an official trade. This one, I think, if I'm not mistaken, this one clipped. I had a very tight stop on it. Might have been clipped up here, the official stop, but it still looks good and has all along. Again, this is another silver miner. You can see just a very steep bearish rising wedge, confirmed with divergences, everything you want to see. Trend indicators clearly in bearish territory, still pointing lower. Just as we had a bullish divergence back here, a divergent low, which led to that huge rip, we have an equally, divergent high on the bearish side, with these negative divergences and that very steep rising wedge. So this one floundered around. It caught that support level, bounced around it for a couple weeks, and has clearly broken below it now. And it appears to be headed down to at least that 965 level, possibly this 866, and again, this is a potential third target if things get really ugly, and and that will really kick in if the dollar continues to strengthen against the other major currencies like the euro and the yen. So that's CDE. Let me think if there's any other silver miners I wanted to talk on. HL, I think I covered before. In fact, oh yeah, this one I believe is an official trade idea. Just playing out as it should. Bearish rising wedge, breakdown, impulsive move. You didn't have a reaction until we hit the second target. In this case, we smashed right through the first target. As I mentioned, broken support then becomes resistance. So this first target area, you can see all the subsequent bounces stopped cold at that former support, now resistance level. We traded in this sideways range, and we've now broken down below there, which opens up the door for a move down to the final target there at 487. So, there's a stock that's already down from entry or from the breakdown of the wedge about 23, almost 24%. And just most of that occurred, in the initial move down. And then we've had this consolidation period. But so we'll see. We'll follow the charts. If it gets really ugly, there's the next solid support levels all the way down here around 381. I just don't see that at this time, but we'll keep an eye on the charts as they develop. couple more. Let's just click on a few and see what I have on the charts. SSRI. There's SSRI. Had the same. All these charts will look similar. As I mentioned, birds of a feather flock together, especially in the mining sector. They're all going to trade almost in lockstep with one another. So there's a gap that's been backfilled. See, I had the top of the gap marked right there. Let's show you the bottom of the gap right there, and that's where we're at. So we're at gap support. So these are levels that the miners could bounce today. An objective area to take profits. I wouldn't step in here and try to go long because any bounce may be fleeting. But either way, it's just we may or may not get a bounce. We could continue to smash through there because, as I said, today's price action broke us down from a multi-week, month-long sideways trading range. So that's a pretty powerful bearish event. Let's see. I'll wrap it up there. I covered GDX. I covered some of the individual silver miners. I covered gold. Here's the silver miners ETF. Same story. Again, these charts, as you can see, look almost identical. You have the recent consolidation zone. But for those of you that prefer the trading the ETFs, there you can see what's happened with silver. We had the initial breakdown like the rest of them, consolidation. Now we've clearly broken below there, and you can see that silver's coming up on that second target zone I had listed. And if it takes that out, then it probably moves all the way down here to this potential third target zone, which is just above the $32 level. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.